Hey everybody, I'm Greg Rand. I'm the Chief Strategy Officer over at Renters Warehouse. I don't have any hobbies. I don't have many interests. I am all about single family rental investing. I'm a geek when it comes to this kind of stuff. And so I'm going to take the next 20 minutes to kind of walk you through the foundation of long-term investing with single family rentals. And then I'll finish up with showing you some really cool tools that we have available for free that you can go play with and execute on what we talk about here. So goes without saying that I hope everything's okay with you and your family. I hope that you're holding up well through this crazy time we're going through. And if your family was impacted by the virus directly, our prayers are with you over here. Okay, so on with it. What is SFR? Single family rental. This is a conservative long-term wealth building exercise, right? So SFR is about rental properties with tenants and management in place, stable, predictable, modest, and dependable return on investment that lands you somewhere between 8 and 10% return on investment. Okay, so picture a cute, tidy little house in good condition, kept in good condition, occupied by a tenant, paying you income and getting more valuable over time. Simple, right? It helps to contrast what SFR isn't. Okay, there's a very busy and very noisy segment of residential investing, which is all about the distressed property, all about finding that junker and fixing it up, getting outsized returns on investment and taking outsized risks, and basically hunting for deals, deals, deals. Okay, I've never gotten a deal the way that's defined by the people that you see on Home and Garden television and the seminars that come through town every now and then. I don't consider a deal to be buying a piece of junk, fixing it up, taking a risk, and then flipping it, because I'm about using real estate to build long-term wealth, and so short-term hits like that don't interest me. They may interest you, and there's nothing wrong with it, but it's not the world that I come from or the one I think it's misusing the asset class for what its best application is, which is long-term wealth building. And if you're going to flip a house right away, you're not going to get the appreciation, you're not going to get the tax benefits. And so I'm not going to be able to show you much about how to get great deals if you define that as getting deep discounts. I am, however, going to be able to show you how to get great deals if you define that as buying in excellent markets that have long-term upside potential because of population growth and housing demand that goes along with that. Buying the right houses in the right place, finding the right tenants, and having your investment perform exactly the way that you were hoping that it would. A little more background though, because I think it's important to kind of lay the groundwork. This is a snapshot of a report from the Harvard Joint Center for Housing, whatever. Rentership households. The blue bars on this bar graph represent the millions of households that are in rentals. And it's deceivingly low in the 1980s and 90s, but that's 33 million is the bottom scale of this. So there were 33 plus million rental households back in 1989, and there are 43 million some odd rental households in 2019. So there's been a strong growth pattern on the creation of rental households. You can see how it really took off during the housing crisis. So when home ownership goes down, when the demand or the ability to buy homes goes down, the demand for rentals goes up, right? You're going to find a lot of this is like super duper common sense, okay? People need to live indoors. People like to live in America. If those two things are intact, well, then rental household creation is going to happen over time. It's been in the dozens of millions all this time, but when the economy falters, rental households creation goes up. In this case, though, rental household creation continued to go up even well into the recovery of the mid-2000 teens, okay? And now it's leveled off. You could be the judge as to whether the recession caused by COVID-19 is going to be a short-term one or a long-term one, but there's no indication at all that rental household numbers are going to decline. If anything, they're going to go up. They don't need to go up. I'd be happy if they stay where they are. But that just gives you an idea of the customer base, right? The demand base that you'd be counting on if you own rental properties. Are there going to be people that want to pay you to live in them? This is an indicator of how you might think about that. Another interesting thing is that, of course, rentals come in a couple of different forms. You've got multifamily, so apartment buildings. You've got 2 to 4 family, which are those apartment houses, and then you've got single family. And most people perceive single family to be among the smallest because you drive through a neighborhood of houses and there's kind of a presumption that these are mostly houses that are owned by the occupant, just kind of culturally the way I think most people think. Not so. I like houses better than apartment buildings. And the reason I like houses better than apartment buildings is that, number one, houses are the shelter usually over families. Okay, that's kind of the target market of a rental house. Families stay put longer. Families set down roots. Families fall in love with school districts. Families adopt dogs, right? It's a more stable thing. So if I build a substantial portfolio over time and I want to sell one door, I can do that if I own 10 doors. If I have a 10 unit apartment building, I can't sell unit 201. Additionally, I think it's really important to note that when it comes time to sell, if you ever do want to sell, or if you do what I'm planning, which is to leave these to my kids and someday they want to sell them, there's always a market for homes. Because even when the economy is down, there are people who just got a promotion. Even when the economy is down, there are couples that just got married, that just found out they were going to have a baby, right? So people's decision to buy homes are usually driven not by macroeconomics, but their own personal family microeconomics. And that, at the end of the day, when you own single family homes as rentals, every time a lease expires, you have an opportunity to sell that home vacant to a home buyer. Every single day the house is occupied, you have the option to sell that rental property to an investor who's going to leave the tenant in place. And so you sort of have like a perpetual fork in the road. Is this property going to be something that's more saleable when the time comes that I want to sell it to an investor, or is it going to be more saleable to a home buyer? You don't get that with apartment buildings. So if you're going to embark on this endeavor to build a high performance investment portfolio, one of the first points I want you to get your brain around is that professional investors choose the market first, and then they pick the house. So where is more important than what? It's a really interesting point, actually, because a lot of people, especially when they're sort of infected with this idea of finding a deal, they wind up finding a deal, and where it is less relevant to what kind of deal they can get on it. So they buy in the wrong place. Everybody knows the first rule of real estate, right? Say it with me. I know you're by yourself someplace. Say it with me. Location, location, location. Where is more important than what? Once you find the where, then you focus on the what. So let's talk about that for a second. Searching for a market that has upside is all about understanding the big picture, and it's all about understanding yourself. And so when I say understanding yourself, what I mean is I don't know where you are and where you live, but owning and investing in property near where you live is obviously a good idea at face value, meaning you're nearby. You understand the community. All right. You may have sent your kids or are sending your kids through the school system. You might have gone through the school system. You might know who the mayor is. Okay. You understand that Target just went in, but Walmart just came out. Like, you have your finger on the pulse of the market. And when you're going to be a strategic investor in single family real estate, it's just like being a strategic investor in the stock market. If you're hands on from the standpoint of having your brain engaged on this thing, living in a place is going to make it so that you understand, like, you'll know if a hurricane is bearing down on where you live, right? So if you own rental property in that market, your ability to surveil your property, to understand what's happening, is at its highest peak if you actually live in the town. However, some of you live in towns that are too expensive to be good rental properties. You can't generate a good profit on those properties. The taxes are too high. The prices are too high. So then you say, well, where do I go next? Everybody has their primary place where they live. Then they have a series of secondary places where they don't live, but they've got a high degree of familiarity with. Like, where did you grow up? Is that a different place? Where do your parents live? Where do you go on vacation? Or did you go on vacation as a kid? Right? I grew up in New York. My family went to the west coast of Florida. I have an understanding of the west coast of Florida intuitively for having driven back and forth there my entire life with my family. Where'd you go to college? And how about this? What about, is there a place that you would like to retire someday? Is there a place like Charleston, South Carolina that you've always had passion for, visited once, would love to have Charleston in your life, right? Building an investment portfolio there kind of throws an anchor in that market and it brings it into your life. So starting off with would you like to be for all those reasons, because the more connected you are to the location, the easier it's going to be for you to keep tabs on it.
Thanks for watching part 1 of long-term investing with single-family rentals. To see part 2, subscribe to the channel. The next episode will be up this Friday.